Okay, so let's get down to our analysis. Let's go back to let's go back to last week. Okay, last week is 25th of March. That'll be a Monday. So let's study some of the movements. Let's just go back to February 21st and see how our trade ideas played out. So let's just click on this one, pound dollar. Essentially, before I would take any sell, the idea for this is the trade idea would be this looks strong. Now, in order to confirm this move, you're gonna need something like that. Is this what it's gonna do? No, it's still too early to say because this one could, it could always shoot up. That's the thing. So what I want to do is look for some consolidation and then before I look for the downside. That's the trade idea. So let's just see what actually happened. And therefore, if let's say this was to come down, some people do this and they just put a fib here, 618, and then they expect to sell it down. And then once this has gone above, now it would have been stopped out right there. Therefore, when we trade stuff like that, we always want to wait for more waves. You need more swings before you can take something like that, right? Generally, the minimum you need is 3 waves before we can even decide what you plan to do. So if you have 3 waves like that, then you can start to plan for this one, right? If you have this and this, it doesn't say anything. So you need more stuff. Okay, so right now, what we have is something like this, and up. So what does that mean? It will, at this point in time, this whole structure cannot exactly be we cannot forecast, at least for myself, I cannot forecast anything based off this one, right? So if I was to trade, I would have to trade it basically what's inside this. And it had to be on a lower time frame. However, if say this one was to go down this way, was to go up, when it comes here, it goes up like this again, and then it starts to form some channel here. Then this could still be this 2, 3, right? This could be. So instead of this one, this could always be something expanding, but that's hard to say right now. So I wouldn't actually look at that anymore because this one actually pierced this top. Now it could be a stop hunt. That could be what it is, but essentially what I'm interested in right now is to see how this one plays out a little bit more. So something easy would be for this, come here, go up, break this, make a bigger one before we take the bigger move down. And basically the idea for that is because you're looking for this like one like this. So you have a bigger correction here, then you're looking for something like this to go down, So at this point in time, I did trade pound dollar. I did trade these small movements down, but I traded it on a very low time frame, 5 minutes. Right, so it's like kind of in and out because I can see how some of the structures played out here. But based off the daily, based on the 4-hour, there would have been no price action that would suggest that I get in a sell and hope that happens. So waiting for this is very good confirmation before you take the next move down. Okay, so confirmation is important. Okay, before we decide to do anything. But you can trade this on a 5 minute, which is what I did. Okay, so let's go look at euro dollar. The euro dollar, anywhere here should have been a buy. Is this going to happen? This requires confirmation, but at least when you're trading this one, you're trading this to the upside for sure. So euro dollars we need to be looking for. As this was going up, we're looking for the buy. So let's just. Came down. So this actually came down over there. Now, when this was going up, what I was looking for was this one to push up strong like that. So once you reach around here, you're looking for something like that, and then you're looking for this move down. So once this one has started to move up, you can see you're looking for the down. That's why there's this arrow up. That's why there's this arrow down like this. So there's this moves up and comes down. Now, what's interesting about this structure is that this may not be actually, they may not be related to each other, because now that I studied it more, this one looks more like this is a correction. This is actually a 1, 2, and this is a 3 move. This could be actually a piece of its own like this. So as of now, I was interested from the buy over here, but now that it's gone up to somewhere over here, it starts to look more like a sell. Now, this one is possible. This one could go up here for one more try. It can still be a 1, 2, 3. The reason for that is because, right, even if this was going to go down, the smart money, they need to stop people out. So if, let's say, we were in the sell and we are stopped out here, so we took the buy here. Well, if the smart money wants to fill the sells, they can always push this up. So when we buy, at first we were in the sell. Now when we buy, then the smart money will sell to us. So they sell at a high. When this one comes back low, they buy it back at the low over here. So that stuff happens very often, right? Therefore, when I was when this one went up, you're looking for the buy. When this one came down, I was in the sell, but I'm not selling it to keep it all the way to the low. The reason for that is because forecast is one thing. This is forecast, but as a trader, I trade the stuff in between as well. And I basically all this I have to see what's going on in the lower time frame. So that's the price action. Okay. Now, speaking about people being stopped out, I think there were some very good examples on gold, which I'm going to show later. Knowing the levels at which they try to, the smart money tries to stop us out. Now, if you look at this one, you can see that we're definitely this is the buy. So the trade idea is the sell because it's a bigger move. So let's see what actually happened. Now, these are all live charts, so they're nice to see. Now, if you look at it, when this one starts to crawl down, it looks a little bit suspicious, right? It looks suspicious. So you know that if it wants to go, it can. If we were to sell, and now we had to buy, and because this is our stop loss, we put a sell in, and then there was a buy stop loss here, and then we bought here, assuming we were to sell, and we bought here. Then who sold to us? Who's the guy who sold it to us? Yeah, the smart money. I mean, those big funds, they sell it to us, and then they sell at a high. And look at it. This is the bigger direction, and that's how those guys make money. By stopping out the retail guys like you and me, unfortunately. So whenever if you see coming down strangely, always remember your stop loss cannot be just like that. So the lot size needs to be measured. What you should do is you should stagger your entries. You sell a bit here, you sell a bit here, but people might say, "Hey, you're averaging now. It's not a good idea." Well, it's actually a good idea if you know how to manage the risk properly. So some people, they will sell in here and then 5-6% risk, and then when it goes against them, it comes back, they take off a break even, and to see that happen. So always risk less than what you can actually risk, because that allows us to stay in the trade much longer than we can, right? So definitely the sell was the better idea. Stagger entries is a very good way to try to take the entire move down, right? Right now. Okay, so this is a very good trade idea. Now look at dollar South African. Now, the idea for this is not to buy this up. Why? Because this is very difficult. If this was going to be, if waves are going to move that way, corrections are difficult to trade. I will tell you, they're very difficult to trade. So it's safer to trade the bigger direction. So this one managed to somehow crawl its way all the way up to this level. And at this point, you're looking for the sell down. Slowly sell it down, because it can come, it can break, it can come, it can break, come, break the trend down, go up, get us some orders, come down, get us some orders, and come down like this. So there's no need to put like 100 lots. Now you put in like one lot, or maybe 1 mini, and then 1 mini, and then slowly slowly just enter, dip our feet, our toes into the water. So it did what we want. So let's see whether we can get that, right? So it really worked for Aussie dollar. It worked for Euro dollar. Let's see whether we can get this going as well. So let's look at pound yen. So pound yen, this is another stop hunt. I mean, if you look at that, you see it went up. So what I said here, wait to see smart money swap out retail buyers with their own buys by taking out sell stop. So if you were in a buy, you were on the right side, right? The buy is the right side. So, but you got to understand that price action can always come anywhere here in this zone here, like 144 around this levels here, and then before it actually goes up, right? That's how they make money. They come here. If you want to buy on the breakout, you buy, all right. But look what happened. You get stopped out. So forecast is one thing. However, the ability to manage risk is another study altogether. All right. People who work with me one-on-one, they know that I'm very trade oriented. Forecast is important, but trade execution is so important. It's so important. Even the people who forecast correctly may not have gotten into this buy at all, right? Dollar Mexican, let's see. So getting some really nice trade ideas. I see a lot more good trade ideas coming out for silver. But anyway, this one, definitely the bigger move to me is down. It didn't really turn out the way that I wanted it. It's still the bigger correction, but I would not be interested in the buy, because the whole thing looks downside. If you actually look at it, this looks like could be a correction of that somehow, and you don't really want to be in the buy. And the only way to remember to take swings is to not risk too much. Don't risk. Don't go for Hail Mary. Slowly enter the trades. If you can trade one standard, let's say, put 2 minis in, and then just see what happens, right? So that's all I have to say about trade management. But in terms of forecast, it still looks down. I definitely wouldn't want to take the buy on this for now. Although I could see this actually go up. Remember, before price action can come down, what does it need to do? You need to take out some people's orders before it can come down. So we have to be aware of that. Like all these levels here. Could price action somehow crawl its way there before it dropped? Yeah, it could. Because why? Well, again, smart money needs to fill the sell orders with people who are stopped out. People who are in the sells, they need to be stopped out. When they're stopped out, well, smart money can take the orders for sell and bring it down. So forecast is still downwards for me. I wouldn't want to buy that. Pound Swiss. This is a daily. Interesting. This one is very, very interesting because to me, I think it's going to push up some more. As you can see, I put this pretty high up because to me, I think this one I want to sell only when it comes to around this place. Then I'm looking for one move down. So there's a timing involved. When it came like here, I'm not looking for any sells immediately. I want this to do like crawl until around where the B is. See the B here? Here I start looking for I start to put risk on for myself. Yeah, okay. So let's bounce this. What's Aussie Kiwi doing? Okay, Aussie Kiwi, I put buy bias. Very interesting. This is very interesting. Buy bias because I can actually see this. You see that? So it actually did that. No, it's quite amazing to actually see it live. Actually, sometimes. So here you're looking for. See that you're looking for the down, but over here you got to be careful. Which means, right? If let's say a sell was taken, does not mean that you're going to hold it all the way. It's actually okay sometimes. Let's say for whatever reason you took a sell here, you just take and go because you never know what's going to happen, especially when sometimes you see stuff like divergence, stuff like that, and you're not too sure. Well, just take the trade because it come here, it moves up straight away. So if this is a first move up and this is correction, you can expect it going to be terrible. If we know we are trading in a potential corrective structure, there's no sense in holding trades for too long because corrective structures, they go down very, very, very messy, right? You put a tight stop loss, you're going to stop off for sure. But motive waves, they don't get stuck. I mean, it doesn't come back. They just like this. They just go like this. They just go like this. There's one characteristic of motive waves. So in this case, the idea was for it to make a correction and then drop. Yes, and that's what it did. Now over here, gotta take some profit because why? This could happen. So we don't want to be in a trade and then only to see ourselves getting stopped off or break even. Especially when you start trading big lot size, you don't want that to happen. Right? You might be up 2, 3, 4, 5,000 and suddenly becomes $0. That's not very good, right? As opposed to, let's say you're up $50 because the account is small, you'll get stopped out for break even. $50 may not change our lives, but if we're gonna be trading big lot size one day, we mustn't let ourselves be stopped out because we didn't know what happened basically, right? So next, let's look at silver. So far everything on point, and it's just amazing, So silver, what I put here was, this is the zone here, that when it was up here, there should be no bias up here. In other words, right, let's just do that again. If you want to take the buy on silver, you need to wait. We at least need to wait for proper pullback to this level over here. See that? So for me, if I want to take a buy, price action has to break here. It has to do some stuff around here, but this is the low levels over here. So since I don't want to be staring at the computer 24 hours, these levels need to place where I start building up my buys. Now, I'm not going to put 100 lots there, or 10 lots here. It doesn't make sense, right? Because if I don't want to be staring at my computer, this stuff can happen. And if I want to rest easy, you have to ease into the trade the way the institutions ease into the trades, right? It goes up, it comes down, stops up here before it goes again. So what we want is to time ourselves properly so that when this one comes down here, it goes up, comes down here, you can buy a little bit, it shoot up, it comes down here, you buy a little bit, and then finally you end up. So you have buys slowly all closed out right at this level. But you're not putting big lots here. Otherwise, it's very hard to live through all the corrections, right? And the CFDs, you have to some pairs there's negative swap, so you don't want to go in full force. Just stagger our trades. Stagger our trade entries is a good idea. So silver is on point. Pound dollar was very interesting. Now pound dollar, as you can see here, you see this moves up. This moves. This is important. Without that, that cannot be had. You cannot take those trades. And let's see what actually happens. You see, that is the magic of it. That is the magic of understanding. Forecast is one thing, but price action is very important. So understanding how price moves is very important. So if you actually fit from here to here, this would be somewhere around the 50, I think. I'm guessing around the 3 to 50. Maybe between the 50 could be, I don't know, 50% might be somewhere here. So anyway, what do we do now for this one? So now we have this approximate trend line over here. So can this keep crawling all the way down? Maybe. But I would have to say one thing is that if you see something like this and it pops up above like this and it corrects like this, this could potentially happen. This could potentially happen. And once it gets up here, I will not be keeping this trade. It has to break. If it breaks, it pulls back like this, I will consider a buy after a correction. Because if this one goes up, let's say this goes up like this, suddenly it just chop, like this, chop. This whole thing is downside. So the only trade I'm interested in is this move. If you're day trading, I'm interested in this move going up. But what happens after that? Price action will show me the way. Okay, so as of this point, I'm interested in the move up still. Right? So it looks on point so far. Okay, so let's look at pound yen. Now, pound yen was very interesting because pound yen was against my what I felt for pound dollar. Now, pound yen came first was to here, the next one was to here. But now that I'm looking at price action, okay, so now that I'm looking at the way price moves, I can tell you that when it came here and then when it started to do stuff here, I took the trade off. I didn't want to take this trade down because why? I took the buy on pound cat. So in my opinion, I never take. I try not to take trades that are, I don't take pound yen buys and pound dollar sells. I don't like to kind of like hedge against myself because both have a pound in them. Some people say there's no correlation. Well, I mean, I don't know what. To me, since I'm a swing trader, if the pound is going to be negatively affected and the pound yen goes down 100, 1,000 pips, the pound dollar will also be affected. And in scalping, it may not matter, but when it comes to the big swings, there is correlation. To me, there is, because I'm trading this kind of swing. I'm looking for this kind of swings. And if there is some kind of pound strength that's affecting this, making pound yen go up, and I'm selling the pound dollar, it's not a good idea. It's not a good idea to me, but that's the way I think. I know some people think otherwise. Well, I mean, anyway, so we all have our own way of trading. So anyway, now that this has come down here, and when this one came up here, up here, I closed it. Do I think this is going to come down? I'm actually kind of biased to the upside for this one. Now, I don't want to take this buy because I have price action on pound cat. And I'm interested in the pound cat strength. So I'm going to see what happens. This one, I think this one could go up. And I'm very, very concerned because after all, this is uptrend. And if this one was there and this does that, this is all very possible. So I took here at this point when it came down here like this looked like a good sell. But when you start to do this, it don't look so good anymore. I'm thinking this could go up one more time. This could go up like that. It could make a double top like this. And then if you see some price action here, come here up, and then you want to take this sell, maybe you fit from here to here for this move down. This is a good idea. So in other words, what I'm hoping for now is I want this to happen, but I want this to go up here, do something like this, some kind of divergence here, maybe some kind of divergence here. And then this one, I'm interested in this move down. So yes, I was in the sell, but I've taken this off already, basically. Okay. Okay, so let's have a look at this one. Gold. I think one of my subscribers, Ahmed, was asking me about this. Hold on. Let me see. I'm looking at gold. Is it this one? Yeah, I never really got a chance to explain, but I'm going to explain this now. So we have, so someone's asking me, do I expect a drop to 1290? Well, let's see. So here I'll say, okay, there's bullish price action, and then which happened, and then he asked, do I expect the drop to 1290? Well, what more is there to say? This is exactly what I mean by smart money. Even if you were in the right side of trade, you and I need to be taken out of the trade before smart money can make their big money. Then we need to be taken out of if this is going to go up, we need to be taken out of our buys before smart money so the smart money can fill in their buys. We sell low, we took the buy, we got stopped out, we sell here. Who's buying? Who's buying? Who's smart? If this goes up there, well, then you say, oh yeah, on hindsight, smart money bought it. They bought it right there. So they buy low, they sell. They buy low and they sell high. And therefore, if we were in this trade, if we took this buy up, so let's just see it again. So let's say, if you took the belt, and it's important to take profit around here because why? There is always the option for smart money to stop you out before it actually goes again. All right, and that's just what happens. Take a profit, it comes here, you buy it again. Take your profit as it goes along. Something goes wrong, get out of the trade. Because why? You can always re-enter at a lower price. Right? So this one was was on February 14. Let's look at the latest. So right now we're looking at gold now. So gold has fallen to the level that I spoke about here. So what do we do now? Now that it's fallen down. Well, you must notice this is important zone. This is important zone. This is where there's consolidation before it dropped. It consolidated, it dropped. Okay, what that means is, right, for people who trade these kind of zones, right, support resistance type of people, type of traders, these zones are important to them. And why I mean important? Because they are looking at this. People will sell here. People will sell like here and here. They will sell here. They will sell here. They will sell here. Now, this is where we need to define what is swing trading and what is reaction trading. What is the swing trade? Right? Is this a swing trade? This is a swing trade. Swing trade have something in between these two impulses. There is something. This is a swing trade. There's something in between them, like a broker. Before he can actually go, he has to do something. He has to stop people out before this can continue. Unfortunately, stop people out before it goes down. Stop some of these suckers before it goes again. This is people getting stopped out. And what's that? The smart money are filling their sell orders. This is smart money filling their buy orders. Unfortunately, right? So right now this has come straight down here this way. So when it goes up here, this kind of sells, right? They are high risk, and only people who are versed in playing this kind of trading know what they're doing, and they have a certain way to manage that kind of risk. And not going into those details, they can be highly risky. But I just understand that this stuff are all just reaction trades. What I mean by reaction trades, see like this one over here, when this one came out one time, there was a reaction, it dropped. So this can be 10, 15, 20 pips. 20 pips. This can go up around, let's say around or this level, it can drop maybe 10 pips. Now, those are just reaction trades. This, just because it came down, doesn't mean that it's going to fly. It doesn't mean that it bounced, doesn't mean that it's going to come down. Because to come down, it needs to stop people out before it goes again. People need to be stopped, unfortunately, right? So these are all just places of reaction. But if we have a very bad entry, say our entry was like somewhere here, can you imagine running right into that, going up 10 pips and suffering for another 8 hours before it goes, suffering for another 8 hours before it goes, suffering? These zones represent places where there is potential trouble, basically, right? Like stuff like that. You see here, if it breaks out and consolidates, well, people who do swing trade will take the buy up, basically. Like stuff like that. See, when it consolidates, people who will take the next. Swing traders need something like this to take to get the next move. Now, when price action came back to this low here, you see here, where this consolidation was, it gets stuck. It bounces up. So those reaction traders are taking this kind of money. Do I take those money? Well, I find them dangerous to take. So as a swing trader, I do not take these trades. I used to, but then I find that my calling is based on forecast, which is very accurate to some degree, and so long as I manage my risk properly, I will walk away with a profit, right? So what we do need to know is, let's say you're taking a sell down here, we need to know that this is a potential place of trouble, right? So if let's say we enter a trade somewhere here, well, guess what? It came here. Let's say we took a sell key and it bounced back. Can you imagine break even? It comes down and it takes you out like that. So if somehow the trader was that good and he managed to pick the top, well, we're probably not that good. We won't be able to pick the top. We pick around here. Well, can you imagine giving back 70%? You up this amount of pips and then you get back almost more than half. So knowing where these places react is very important. So again, if this one comes up here, knowing that this is a place where price can react is important. All this here, all that there, all this here. There are many places it can react, and that's the difficult part of reaction trading. I think it's kind of tricky because sometimes just zones they don't hold, so you just gotta take those losses, which is not what I like to take, basically. So let's say we want to take this buy. To me, if you take this buy, it comes up to around here, I will surely exit. Would I keep this for that? Absolutely not. Why? Because if this one goes up there, it does something like that, I will take the buy again, somewhere here. So I want to take this one, and I want to take this one. I don't want to be caught in this type of stuff, the sideways stuff. I would rather go streaming or do some stuff while that's happening, and then try again later. Come back later. So what we want is just this and just this, and just this basically. That's the stuff we are looking for as a swing trader, basically. Okay. Okay. Let's go look at the one last one. Pound cat for trade idea. Now, pound cat, if you look at this chart here, you can see that I'm actually interested in this buy over here. Now, does that mean that I'm thinking this buy is going to fly all the way out there? No, not really. All I want is if I take this buy anywhere here, I will certainly look to exit. If we consolidate, I'll take the next move. If we consolidate, I'll take the next move, because pound cat on the higher time frame is very dangerous. There can be a drop. The reason I have this here is because I think this will end somewhere around here. There's a very big move down, and that's why I would take small 30, 40 pip moves to the upside, but I think there's a big move to the downside. That's the way I see it. Right. So any buys here, the stops would have to be, anywhere here. Right? Anywhere there. So that is trade execution, which I teach, which I will talk to my people who are in my mentoring group. And but based on forecast, this is the way I look at it. I'm looking at this move up basically. That is a forecast, right? But we all have our own trade execution style. So if you have your own, then great. You can benefit from my forecast and use your own trade style to enter the trade. But if you want to know how I actually enter the trade, then you're welcome to join me at forex-family.com. And that's all. Thanks for listening. I hope I was helpful and useful. All right.